Welcome back to Fast Market, everyone. Kevin Hinks, Nathan Peterson. Now it's time for our cash tag segment. I'd like to bring in the co-founder of LikeFolio.com, Mr. Landon Swine, to the show. He's going to talk about Decker's outdoor footwear, apparel, accessories. For the people that don't know, they make Uggs, they make Hoka running shoes. They've also got a couple other brands. Landon, this is a company, when we were covering Nike, this is one of the names we mentioned as nipping on its heels and taking little chunks away. They've also got, but this is a much broader company than just Hoka running shoes. Give us your data and give us your thoughts on Decker Outdoor.
Yeah, it used to be the UGG, the parent company of Uggs, and that's it, right? I mean, that's what people thought of. But now Hoka makes up the majority of their sales, their market cap, if you will. And with good reason. I mean, what they've done is they've decided to not compete on price, be more expensive, and be the best product. Like that's their strategy, and it's paying off. And what we're seeing is a lot of people are moving away from established brands like Nike and going for the more tech superior, more authentic, better performance type shoes. And when it comes to running, I mean, Hoka is really doing well. I mean, they're growing very quickly. Long distance runners, marathon runners, that's the preferred brand. They love the performance, the durability. They're also starting to add in hiking and walking. But and anybody who works all day on their feet, I mean, that's their target market, is people who need comfort. And so, we know that repeat purchases for these two brands, for Hoka and for Uggs, that actually beat the category by about 31%. So they've got customer loyalty. You're showing a stock chart here where you have to talk about that. I mean, that last earnings report, I don't know what the word for it is, but the stock got decimated. I mean, it went from 220 to 180 overnight. Closed down that much, and now we're down in the 125 range. So this stock is, you can consider it half price basically from 3 months ago. Now I know that again, it used to be Uggs was the story. Now it's more in the Hoka category. But what's great about Uggs is they used to be all winter boots. Now they've transitioned, and now women 18 to 34 survey shows that they're viewing it more as an everyday fashion. And so you can kind of see how their three main brands are doing here. Uggs is actually doing the best on a year-over-year outlook compared to Hoka, but they're both doing really well. Teva, not so much. But the focus here for investors, obviously, is Hoka and Uggs. Hoka primarily. Now this has been pretty bullish for me so far, but I will say that one of the concerns that we have is they're not the only one going after the big establishments, right? I mean, we've talked about OnCloud a lot, but they're the dominant player when it comes to taking away market share. And you can see here in this chart, Decker Outdoors is doing well at plus 12, but OnCloud is doing better, right? They're over double, taking away from all these others. And of course, you got Nike at the bottom. That's where everybody's kind of focused on. Let's take market share away from Nike. And they're doing it on performance, technology, comfort, all the things that I think Nike made its name on and has drifted away from. And now Nike's more of a, hey, we're Nike, you should buy us because we got the swoosh and we got big names. But people want they want comfort on their feet, and that's kind of what we're seeing right now. So, overall, I'd say that long term, I love this opportunity for Decker investors because of where the price is at, and because of how well we see Hoka doing, and we see that Uggs is getting stronger as well. But I also worry that they've got pretty fierce competition with OnClouds, and they're both kind of going after that same segment, right? I mean, they want the runners, they want the people who want comfortable shoes, that are willing to make those repeat purchases. And so it's not a clear path to victory for Deckers, but they're so far showing that they've resurged their brand significantly, despite that last quarter stock reaction. And I am bullish on this one long term from this point.
Hey, Landon. I looked over the last quarter's results. 16% year-over-year growth in Uggs, 23% in Hoka. Your data looks pretty encouraging there. Maybe can you talk a little bit about trend, just from those data points, like how it's been trending? Are we moving in the upward directory or downward trajectory? And then I think perhaps one of the risks of being in a stock like this, maybe not so much on the Hoka front, but on the UGG front, as is a fashion retailer, and let's just say celebrities started to get a little bit turned off on UGGs and stopped wearing them. How would you know that a trend is maybe under some kind of a degradation and then it's on the way out? Is it something that happens overnight, or do you begin to see a trend develop over multiple quarters before it kind of goes by the wayside? I'm thinking about like an Under Armour, for example.
Sure. Yeah, so it's rarely overnight unless there's a big event, like a big spike in negative consumer sentiment. That's pretty rare to see those, but you'll be aware of them, right? That those don't take you by surprise. The other ones are more of a slow shift over several quarters. And that's the kind of thing, that's why we track year over year, quarter over quarter. We want to see what that acceleration looks like. So it's not just purchase intent, but it's also consumer happiness, and seeing whether or not that negativity is spiking or if the happiness is holding. For both of these brands, it's actually increasing. So I'm positive on that. And when we dive into the consumer positive mentions, it's always talking about comfort. Comfort is the key. Both of these brands, especially Hoka, though, comfort is the thing that everyone talks about. And if you think about it, I mean, they want performance, because if you're running a marathon, you're going to be in shoes for 5 hours. You got to have comfort. You got to have performance, and so that's going to translate into brand loyalty, because when you can run that long distance and you feel fine afterwards, you're like, all right, these are pretty comfortable shoes. I'm going to buy some for work. I'm going to tell my friends. It grows and grows from there. And of course, yes, all the celebrity endorsements and all that help. It's obviously, and if that starts to go the wrong way, then it's going to slowly move away from that. It's not going to be a snap move. That's at least what we've seen historically, unless there's a big controversy, which we've seen a handful of those over the 10 years we've been doing this. So pretty rare, but that's what we track. And again, to answer your question more directly, so far what we're seeing on the short-term versus the long-term trends is both of these brands, and so the company overall are trending in the right direction.
Yeah, Landon. Very few name brands go full Bud Light with their corporate mistakes like they did. But this chart hints to something went wrong. I think Uggs, which started out as a comfortable but ugly shoe, they've evolved into the lower cut shoes, and they've done a pretty good job of adapting that shoe to the changing consumer. Hoka, you're right. They're big. They're like big pillows on your feet. Is any of this sell-off, Landon, do you think, very quickly, is any of this sell-off a China tariff story? Did that affect the price of the stock? Because this stock broke in January, which was a little before that.
Right, I agree. I mean, if that would have been later, then maybe, but I don't see that as the reason. In fact, Asian adoption is up. I mean, we're seeing that's actually a positive sign for this company. So no, I don't think this is really a big tariff play, and I think those concerns are largely eased anyway. They've got upside. I mean, if you look at the running segment, Hoka's about 9% right now. So they've got a lot of upside to take that away. The hardcore runners love it, but just overall, they're fairly small and they've got room to grow. So they can continue to take bites out of Nike and the rest. They've got to fend off OnCloud. That's going to be a fierce battle between these two. But I agree, the resurgence of the Uggs brand has been fantastic. And then, of course, Hoka coming along. I mean, this was one of the first company that told us that we have an advantage in the market when UGG had a terrible quarter. We thought our data was wrong. This was like way, way long ago, 10 years ago. And then a couple of weeks later, they announced earnings and they said UGG sales were way off. And we're like, okay, we got something here. So this is kind of, Deckers is one of my favorite companies. It's got, I've got a soft spot for it data-wise, and the data on it looks good here. And again, I really see this as a discount to market. I think that maybe it was overpriced, but still, I think that 125 is pretty low for it moving forward. So, I'd be willing to take a bet on it short term. I'd definitely be willing to take a bet on it long term as well.
Landon Swan, co-founder of LikeFolio.com. Thanks for coming on. Thanks for bringing the LikeFolio data to Fast Market. We appreciate it, Landon. Good seeing you. All right, Nathan, back to you. You have a paper money trade line